You no longer have to compromise on managing your private wealth. Now you don't have to choose between growing your portfolio or shrinking its carbon footprint. You can do both. You don't have to choose between enriching your own life or ensuring your family's future. You can do both. Or between the trusted service of a local firm and the global access of a multinational. You can have both. Because LGT Crestone gives Australian private wealth investors the best of both worlds. Visit lgtcrestone.com.au.
Hello and welcome to the Global View on this Thursday morning. I'm Nadine Blaney. It's a pleasure to be here with you on the 23rd of May. Look, some sort of competing forces at play on overnight markets. Yes, we've all been waiting for the Nvidia result, which did beat, but we've also equally been waiting, perhaps, for the FOMC meeting minutes, which most in the market are interpreting as being hawkish, more hawkish than expected. So to make sense of it all and what it means for in markets and investors, of course, we've got Ira Epstein from Linn Associates here with me now. Ira, what won the night for you, FOMC or Nvidia?
I don't know what to do first. Good to see you again, Nadine.
You too.
Very simply put, it appeared when you read the notes through that some members are very concerned. Fear is not the word that I've heard people throw that around. They're not scared, they're concerned. They've been higher for longer, and yet inflation is staying stubbornly high. The service inflation is high. The rent doesn't pay attention, and you can see that. So what they've been hoping is that maybe the labor will be one of the numbers. But again, we've just come off a strong quarter. You wobbled. I mean, when you look at the CPI and PPI, you got some wobbles there. And this is a bit older. Remember that this is now almost, weeks old. So now we get to see what happens as we come in the month end and we see the new reports on the jobs data and so on. But how I would view the report is major concern. Instead of one or two members talking, do we need to hike again? There seems to be now enough to call it a choir. And they are starting to question, what do we do next? Now, the lead man doesn't want to do that. As for Nvidia, what can you say? It is a one-trick pony. Understand what this game is. This is like computers when they first came about, 1980. And I remember building my own. I had a North Star, which was a home-built computer, and I built it. I'll never forget. And all I wanted to do was some moving averages and pivot points. And I got it to do it, believe it or not. And it was a whole task. Well, you're at that point. AI is not new. The computing power for AI is what's new. And I don't think people understand all this. That now these chips are so fast and the computers can get up to speed with them, where the average person out there can have massive computing power. The question is, can we write the software to do it? And what you need to get to make this really crossover is language. Now, language means software that's written so that you at home can ask the computer to do something. It transposes it into computer code and spits it out for you. You can then go in and modify it. This is a whole game changer that's happening. This is the next big event of all your lives. I don't know how else to say it. And there's one company leading it, and it's Nvidia.
Mm-hmm. Okay, so look, that sounds like a ringing endorsement of Nvidia and its capabilities, even as competition mounts in this space. So we'll leave that there because when we also look at the overnight session, I thought that Target's results were interesting, showing that consumer spending is slowing, and they downgraded their forecast as well. Toll Brothers was another negative earnings result. So as we move through the next few months, still a big focus on the top tech end of town. Earnings from some of those companies that are, able to protect margins, I suppose, would become more important than ever.
Well, what's the punishment out there? The punishment that you get in the stock market is a company misses on the earnings and gives bad forward guidance. That combination is dropping the companies 10% almost instantly. The companies that are winning out are those that can keep going. So the staple goods are there. The Walmarts, you mentioned Target. Why is Walmart winning? Because their mix of products is a better mix for the person that is feeling those price pressures. Target is lowering the price on 5,000 items right now so that you'll be able to go in and get them at a better price, and there'll be other companies that compete with it. We saw this beginning with McDonald's in the United States. They're going to a $5 value meal. Now, it's only for 30 days, but what it did is Wendy's, the large chain here of hamburgers, they're going to a $3 now permanent breakfast meal. So the race is on to the bottom for the consumer dollar because the consumer isn't any longer buying the high-end goods. We're seeing that in Cartier. We're seeing it at the top stores. My wife's with Tiffany in the United States. And I see that left and right. So the consumer is pulling back. The big money guy always has money. You know that, but you also need to get them to step up and do things. It's why Ferrari does so well, Porsche does so well, and then you've got to go to the other end of the spectrum to get things to happen. But it is good that interest rates are falling to a degree, and we should pay attention to that. At the same time, you've hit on a very important nerve. There's only so far the consumer keeps going forever. Their debt load is picking up, and the lower end consumer, and I don't mean that in a negative manner. I'm talking to people that are making probably in the neighborhood under $100,000 a year in America, probably 60,000. They are under tremendous stress to just make ends meet. The rents don't go down. They were supposed to, they don't. Their food costs don't go down. And at least in the United States, the president's releasing 1 million barrels of gasoline so he buys votes for the election. Believe it or not, that's what we're doing, and it's effective now.
Well, now that you brought it up, commodities, we did see oil coming under pressure overnight on rising stockpiles. We saw copper, you could say profit taking, but I've read also weaker physical demand. Gold retreating from record highs, again, possibly on profit taking. Also when we consider what's going on with the Fed. So do you like anything in the commodities complex right now?
I love all of them. All right, let's understand. In the copper market, you had a squeeze play that took the market out of the $4 range and kicked it up to $519.85 in the July contract. Why? Because the shorts got caught out of China and out of some other areas that used the COMEX exchange, and they changed the rules on the delivery with the sanctions against Russia and other areas. So they had to bring in the metal. So they went to South America, where they probably had contracts they bought for $3.50 a pound, and they went to Australia, your country, and they sent it here. That's what they can deliver on it. So as those deliveries are coming, because these people got caught, now they can deliver on it, you take some of that pressure off. Now think of what you asked me, is gold coming under pressure? What is the Fed worried about? Inflation. What does gold respond to? Inflation. So as long as you have inflation, why would that market decline? One final piece to the puzzle. Central bank upon central bank from Australia, New Zealand, Europe, they're all talking when can they cut interest rates. The race is on to how do you cut them. Why do you cut rates? To spur on your economy. In order to spur on the economy, you're telling me you're not going to use raw materials when that comes on? So you go up in a wave like we just did, you get a profit-taking spell, but understand, as soon as they begin cutting the rates, countries don't cut rates once and they're over. They get into the cycle of cutting rates. That will spur on demand for raw goods. You want to be in that sector. Just be patient. Let the market come back to you if you missed it. It's coming that way now.
Well, I'm glad I asked, and I know we're up against the clock, so there's never enough time, Ira, but really nice to speak with you today.
Thanks for having me.
Take care. That was Ira Epstein. All right, let's get to a little bit more detail on those Nvidia results. Just get you the numbers. Beating expectations. Shares climbing close to 6% in after-hour trade to beyond that psychologically important 1,000 mark. It was a result that markets were on tenterhooks for. Pre-release, U.S. stocks closed down, with the Dow falling the most. That also related to those FOMC meeting minutes that we spoke about as well. But Nvidia's beat was bolstered by a 10-for-1 forward stock split. It posted first quarter revenue of $26 billion, beating estimates for $24.65 billion, and its forecast for revenue beat expectations as well. It sits at $28 billion. Nvidia is basing its rosy forecast on, no surprise, demand for chips from businesses adopting AI technology. Its share price is up more than 90% this year, and it also, as a sweetener, increased its dividend to shareholders. Ahead of Nvidia's results, though, U.S. markets were sold off. There was only 3 S&P sectors moving higher. Energy was the biggest loser. That included Exxon and Chevron. Healthcare was the biggest gainer. Moderna was the biggest gainer there. That's its 8th consecutive advance. Sadly, analysts are watching the progression of avian flu and suggesting that the need for related accelerated vaccine programs may exist, and Pfizer added close to 4%. As I mentioned, Target was down 7% on weak outlook and slowing sales as shoppers pull back spending. Toll Brothers, it's a house builder, it declined after its second quarter earnings missed. And Tesla was down on a report that sales in Europe fell to a 15-month low. And the detail from those minutes from the Fed, we saw them being slightly more hawkish. This was from the May meeting, and they showed that officials were disappointed in recent inflation data, saying that disinflation would likely take longer than previously thought. That's a quote. Various officials also mentioned a willingness to lift rates further if warranted. Yields for 10-year Treasury notes edged up from session lows in the wake of those Fed minutes, and they're sitting at 4.43%. Economic data showed that U.S. existing home sales were below analysts' estimates, but hotter than expected core inflation data from Britain had investors shaving their bets on a Bank of England rate cut next month. Also in the UK, British Prime Minister Rishi Sunak called an election for July the 4th. His governing Conservatives are widely expected to lose to the Labour Party. US dollar index rose, the Aussie dollar slipped. It's currently sitting at about 66.7. So I think it'll be really interesting to see what happens here in just minutes when this market opened, because you have the conflicting forces of Nvidia's beat. You've got the FOMC's higher for longer narrative. We've got energy to think of. Remember, we said that energy was the worst performing sector. We've also got gold to think of. We saw gold falling on profit taking after those record highs. Also, the copper players in New York were down, including BHP. Don't forget, we've got an update on Anglo deal. It's got another week or so to come back with a better offer. Rio Tinto was down, though, on copper. Southern Copper was also down. Freeport-McMoRan was also down as well. Different story for some of these Bitcoin stocks. Coinbase was up. Riot Blockchain was up as well, even though we did see the Bitcoin price just easing slightly to 69,107 currently. So we've got Zero results to get you across on the other side of the break. New Farm results. A bunch of AGMs are being held today. We'll get you across the latest from BHP and Anglo as well. Stay with us. The Open is next.